Hello and welcome to Questioning the Manager. Today we are joined by Neil Hermon, who's the Fund Manager for the Henderson Smaller Companies Investment Trust. Neil, thank you for joining us. Now we're firmly into the third quarter of 2018. How would you assess the year so far and the Trust performance in context of this?
It's been a challenging year for equity markets. The UK equity market is down 2 to 3% as we stand today. We've got the issues around geopolitics, Brexit, Trump, trade wars. The global economy is in reasonably fine fettle, but a lot of things to worry investors. In that context, the Trust has done well. We're up about 4% NAV total return, so we're outperformed by about 6%. So, a pleasing performance so far, driven by stock selection.
And what can you tell us about your activity this year? How does the Trust portfolio compare to the beginning of the year?
One of the things we often talk about in our portfolio is the low turnover, so the average holding period being 4 to 5 years. So it's not a rapid change of portfolio structure or even names. If you look at our top 10, year after year, it's reasonably similar. We are very long-term in our approach. We do have a kind of run the winners approach, and therefore there isn't huge change. Notwithstanding that, there are always things we're buying and selling, and there's always some change. We're not structurally changing the composition of the portfolio or looking to tilt it a certain direction. But we found some interesting new opportunities to buy, and similarly we found things we should sell. So, for example, some of the IPOs we got involved in, we bought things like Integrafin, which has a Transact portfolio platform for IFAs. Bought a couple of gaming companies, Team 17 and Codemasters, and our engineering company involved in protecting offshore wind installations called Techmar. On the other hand, we've sold things like NMC, which has done very well for us in the past. GVC we sold, again, after doing very well for us. And are things that we've felt were no longer fit in the portfolio. So some degree of turnover, but a lot of continuity.
Now the outlook for UK equities is broadly unknown in light of Brexit, and valuations have come down as a result of this. Are you finding more opportunities in the small to mid-cap space as a result of these lower valuations? And what is your outlook generally for the UK smaller to mid-cap sector?
So we look at it today. You think about the market and where we're positioned, it is a reasonably challenging environment, as I mentioned earlier, regarding the things that are out there. The UK market is very unloved by international and domestic investors. They're very underweight the UK, therefore UK valuations do look cheap compared to the rest of the world. But clearly there's the massive caveat of Brexit, and for which we don't know the answer, and the negotiations rumble on without much conclusion. In that environment, we are cautiously optimistic. We are finding good opportunities to invest our money and investors' cash into new opportunities. But we are conscious of the risks. In terms of the short term, I think it's set to be a period of volatility. But we do believe the medium longer term outlook is very strong. We've got a good track record of producing strong relative and absolute performance. We think the opportunity set is still very large, and therefore we are confident about our ability to add value.